Well, welcome to another edition of the Deal Flow Show. I'm JP Maroney, your host. This is Paul Nicolini, our co-host for this episode. Paul is the regional director here at Harbor City Capital. And we're excited. We have a great show planned for you. Today we have Dave Anthony from Anthony Capital out of Colorado. He's going to be joining us for the show here for this interview. Going to be sharing from his storehouse of knowledge, sharing principles, strategies, tactics, secrets on the deal-making process, and talk hopefully a little bit about his business, how they do business, and also his process for keeping his pipeline full. Dave, we're going to jump in by just talking a little bit about your background, because I think it's nice for people to maybe have context or a framework on your background as a business owner, as a financier, as a capital raising guy. So let's talk a little bit about that background, and then we'll get into some of the more detailed questions.
Sure, JP. I'm a certified financial planner. I own a registered investment advisory firm in Denver. We are a fee-based firm. I started in the business 25 years ago, where I went to school at Utah State University, and they had one of the first CFP, Certified Financial Planner curriculums in the country. And so one of my advisors was actually on the board for the CFP program. So they kind of incorporated that as I went through and I was doing my studies. But that was right at the height of the dot-com movement, 1998, 1999, 2000. So I can very vividly remember, as I was trying to determine my major in life, if I'm spending my time working for money, I wanted to understand how money worked and to get money working for me. So I was fortunate enough where I got that CFP designation right out of college. And then I started working on Wall Street as a day trader, as a proprietary trader. Right in March of 2000 is kind of when we started that spring and summer of 2000. Unbeknownst to us, right, the market had already taken a turn, but that was a great way for me to get some keen insights into a different side of the business on the proprietary trading side. And from there, I've done stints at Merrill Lynch and UBS before I went and started my own investment advisory firm about 5 or 6 years ago.
Excellent. Let's talk a little bit about the boom and the bust, right? So, because we're talking about this deal-making process. Ultimately, I'm not sure if you're aware of it, but we're going to be taking a lot of the content from the Deal Flow show and putting a book together called Dealmakers, Deal Breakers. And so it's a lot of these principles and strategies. So having come up in, I think, a very unique time, I was like you. I'd been building companies at that point for a few years, but maybe about 10, 11 years at that point, and was right in the middle of the publishing industry when that whole boom and bust happened. And we built our first website right around that time. It was a very interesting time to be in business. Talk a little bit about how you manage through turbulence in the market and in these times, maybe a little bit about the mental side of this and how you keep your composure.
Some of the pain points.
Absolutely, because we're dealing with it right now, right? With COVID and all of this, people are having to navigate a very unique and interesting situation.
Absolutely.
Sure. Well, when we talk about deals and the art of the deal, I mean, my firm now is kind of structured more along the retail side, where I meet with accredited clients and accredited investors. Mainly it's retirees that are in their 60s or 70s. And they have a couple of $1 million of assets, and so we're trying to put together, a plan for them on how they can work with their assets for the rest of retirement. So we're talking about taxes and insurance and investments. So when we talk about the deal, I mean, this is kind of my niche on working with those accredited high net worth individuals. But my background kind of bodes into this pressure type situation. When you talk about the boom and the bust, I vividly remember when I first started working on Wall Street as a proprietary trader, they weren't necessarily looking for guys that had the Ivy League pedigree and the Harvard MBAs, because they could find people that had the knowledge. But what they couldn't find and what they couldn't assess was your ability to deal well under pressure. In this essence, it was trading. So I think a key thing that kind of was beneficial for me was my background. I don't want to say as a risk taker, but growing up in the mountains, I had a strong background with snowboarding and climbing and some of these adventure activities. So someone who had the ability to take calculated risks, understand the dangers that were there, but they could still move forward with the plan and follow that plan, that seemed to bode well when you had millions of dollars on the line and you're trading a proprietary account. As a matter of fact, I remember one of the best traders that I was ever with, didn't come to work in a three-piece suit. He actually skateboarded down to Wall Street. Our office was on the one. We were at the Mercantile, the New York Mercantile Exchange, and this kid would skateboard into Wall Street, and you wouldn't know it, but day in and day out, he's making $50,000, $75,000, $100,000 of monies as a prop trader, and he's skateboarding back and forth from work. So kind of funny.
Interesting. So we could say that you snowboarded to work.
It's this the dynamic of just understanding what the box is, understanding what the risks are, and making sure that you have the right equipment, the right instrument, the right tools to handle that risk. As mentioned, I'm a big mountain climber, so if you're prepared and you've got the right gear, everything's fine. But if you don't, what should be an enjoyable trip can turn south rather quickly.
Right. Dave, we understand you have a radio show.
Yeah, my radio show is called The Retirement Income Show with Dave Anthony, and the domain for that is theretirementIncomeShow.com. But I've been on the radio about 4 or 5 years now. As I would go to different conferences and networking events, I'm a big believer in coaching and finding people that are smarter than you, right, and who are really knocking the ball out of the park. And just finding out what systems are they implementing, what things are they doing that are making them successful, and specifically making their life more efficient and more effective, and how can I copy those types of things? I mean, they put their pants on one leg at a time, just like me. So, if they're successful doing certain things, why can't I learn from them? And one of the big takeaways that I got was the benefit of radio. So we have a show that airs on Saturday and Sunday mornings. And as mentioned, 4 to 5 years, it casts a very broad net. But now that we've been in the radio for this length of time, we're finding that the types of calls that we get in from folks that are responding to the offers that we have on the retirement planning side, when they call in, they're ready to go. Meaning they haven't listened to the show just once or twice. We have listeners that have been listening to the show for 2 and 3 years. And so when they call in, they know exactly what they want to do, and they feel like they already have an affinity, knowledge of who I am and my firm and what we do. Sure. So it makes the sales process or the deal a lot simpler because they're comfortable with the strategies and the techniques and things like that are out there. So it brings in a different type of client versus someone who's just showing up at a workshop or a mailer that we may send out as well.
Is that a local show or is that a national show?
Well, it's in the Denver market, but we're being picked up, by more and more syndicates. I know we're in the Chicago area, and we're down in Texas. We got picked up by a station in Washington. So on one of our syndicates is the Gab Radio Network. So we're constantly picking up additional airtime as it becomes available in other markets.
Years ago, I learned something, and I've been sharing this for a long time. I often say that people buy in layers, they learn in layers, they also build trust in layers. And what you're talking about makes complete sense, because when you've got people that you're trying to build relationships with, every single one of those episodes that they listen to is another layer of trust that's built on. And we're big on content marketing and content as a way to build relationships and trust and bonding. I was talking to our team here last week. Our CFO, Devon Dames, and I went into a meeting with a brand new bank that we're looking to build a relationship with. And the CEO, the regional manager, or the branch manager, and one of the people that's involved in the bank had all watched our YouTube videos, had read some of our materials. They were very familiar with us, and it really accelerated their process of doing business with us because those layers were on. I'm curious, you talked about that part of the process. How much do you rely on the deal flow, on the radio show, to keep your deal flow pipeline full, in terms of how important is that to your overall process of deal flow?
That's really a great question, because on one end, you've got the component of are you a shotgun, or are you a machine gun where you're going out there and just shooting at everything, or are you a sniper, using this hunter analogy? And we found more benefit in being a sniper and having a very calculated approach to who the exact type of client is that we can help. What is our avatar client, and then specializing in that niche. For example, the type of individual that responds best to what we do is someone who's within 5 years of retirement, or they've already retired. They have a net worth of maybe $2 to $5 million of assets. So they're not super, the 10 to 15 to $20 million type client, although we do come across those every once in a while. It's that $2 to $5 million net worth. And what we're talking about kind of resonates with them on what our unique process is and what our unique strategy is. So the point of the radio show is we're going out and casting a wide net, but the people that are responding to this call to action, they're self-identifying to say, I recognize that I have that problem, and I also recognize that you've presented me with a solution that I'm comfortable with, that I want to learn more about. So when someone self-identifies, it makes it very easy when we're talking about services and things that we can help with, because now it becomes not a selling process. We're not trying to sell them a package. We become more of a consultant, and when they understand that we can truly help them solve their problem and put them in a better situation than where they were before, this is where the fun of the business comes into play. Because not only are we making money and are we putting them in a better situation, but you really gain this kind of a different relationship with that type of client, and that's where you get more of a reward than just the monetary aspect. You really feel like you're changing someone's outlook and changing their future by showing them how an integrated kind of comprehensive approach can in these cases be worth several hundreds of thousands, if not millions of dollars over the next 20 or 30 years in retirement, because of the things that we shared with them.
We had a guest on one of the episodes talking about the difference between an investment packaged and protected in a certain way and through these other opportunities. And as you said, knowing those little secrets and those little strategies that you're able to educate and share on a show like that can mean the difference between literally hundreds of the same amount of money invested, but the return and the ultimate outcome can be so substantially different. I'm going to go back to the show for just a second. I'm intrigued by that whole idea. I had a mentor years ago that said, JP, what would you rather do, sell people one at a time or get them all in one room and sell them at the same time? And that made an awful lot of sense to me. And I look at webinars like that, shows like the Deal Flow Show, shows like the Retirement Income Show that you do, as an opportunity to reach a broad audience with a single message. That's marketing leverage, in my opinion. Let's talk for just a second about deal making. So ultimately, we've got this book coming out called Deal Makers and Deal Breakers. When you're dealing with other people in the deal process, whether it's strategic partners, whether it's a provider that maybe you're going to bring a product to market, or it's actual clients that you're working with, or maybe a fund, what are the deal breakers for you? In other words, when you encounter a certain personality or a certain issue, what are some of the things that it's like that's a non-starter for you?
I learned a long time ago that one of the keys of business, and this is why I'm the business owner, is to make sure that you do business with people that you know, like, and trust. So on one end, if we have someone who comes in and they might have $5 or $6 million of monies, but they're a jerk, and they treat my staff inappropriately, right? That they're not respectful to my staff or the system, even though we can help them and they may want to do business, we don't want to do business with that person. So make sure you do business with people that are nice is key point number one, right? Do business with people that you know, like, and trust, and that you have that affinity with it. That seems to avoid a lot of hurdles down the road. I was talking to an advisor where he went through this analogy of everyone has that client that when the phone calls, you don't want to talk to that person because of this, that, or the other. You pass them off to your sub-advisor or your assistant. If that's the train of thought in your mind with that client, you need to get out of being in a relationship with that client.
You don't want them.
To another advisor or fire them as a client because you've only got so much energy in your day. And as a business owner, if you've got processes that are taking away of the amount of energy that you have, I mean, this is what your staff should do. They should protect you from these things that suck energy out of your day so you can focus on what you do best. And again, key number one is make sure you're doing business with people that you like and who are nice.
I love that.
That is interesting. That really is.
Tell that
to a young broker, though.
Yeah, there's I don't know if it's a written law or an unwritten law, but there's a thing I teach called the law of emotional gravity. You'll appreciate this. The law of emotional gravity states that one negative person can pull down 5 positive people, but 5 positive people can't pull one negative person up. And you got to get all the negative people out of your life. You absolutely do. A member of our sales team, business development team, as well as who's the producer, you've talked to him, Daniel Penaranda. He's here in the studio today. And he was at a party with us one night talking to one of my neighbors who runs a fairly large company in the telecom industry. And he had a funny thing. He used an expletive, but he said, never work for a and I think that could be said as never work with a it's like people that are going to be negative or going to be distract from the opportunity or the deal. So I love that. That's great advice.
Some people lighten the room when they enter the room, and other people lighten the room when they leave the room, right? So which type of a person are you? Are you bringing the energy or are you sucking the energy out?
Right.
I like that one.
That is good.
That's another meme. We need to put that on one of our little quote memes.
Dave,
That's
tell
good.
us, other than the radio show, how else do you attract clients, or how do you do your networking?
Well, I mean, primarily the radio show keeps us busy enough with the types of flows that we're getting into, the types of clients that we're getting into. We really don't do a lot outside of radio advertising. We have our website. We do a lot of word of mouth and a lot of client referrals. But the radio is targeted enough, and the types of people that are coming to us and the referrals that we get, that keeps our pipeline full. In the past, of course, we've done a lot of the traditional methods with doing seminars, and there were years and years and years where I would do educational seminars and educational workshops for folks. We just find we get better returns, and it's a better use of my time doing the radio and casting that big net. But the key with everything that we do is this idea of a direct response marketing or direct response advertising, where someone is self-identifying, they are responding to the problem that we presented. So whether we're using a lot of Facebook ads or we have a YouTube channel with a lot of videos that we'll put out. One of our favorite series is this series that we have called Retirement Plan Smackdown, where it's kind of a parody, but we'll talk about these different case studies that people will bring to me about how they can go out and get the right life insurance policy or long-term care policy, or how they can, what's the benefit of converting their IRA over to a Roth IRA. So we'll put that into a somewhat of a comical case study, but people respond to those. And when they self-identify, that's just a different type of client that you're working with than someone that you're trying to pitch a product to,
Very cool. Very cool. So let's talk about the other side of it, not the deal breakers, but talk about a deal is there one that stands out, you're proud of, it's memorable, it had all the right elements that you could talk about, and why that was such a great opportunity, just what came together, the forces that came together to make that work?
On one end, being in the business for 20, 25 years, the adage is you become old and wise by sometimes being young and stupid. So you can learn a lot from your mistakes and the problems that you've had to hopefully learn from those. And the idea is that when you've got a compilation of those things that you've learned by firsthand experiences, that can help you avoid some of the pitfalls and missteps that come into play. So when I look at where I'm at right now in my business, I've done Medicare sales, I've done long-term care sales. I used to have a stint where I was going door to door in college selling things, and each one of these has kind of added into a combination of where I'm at now in my practice. And when I sit down and meet with clients, that when these right things come together, I've seen enough of these components to know that the deal is going to work. I'll give you an example. We started a private placement fund a few years ago that invests in life settlement contracts. A lot of your listeners may not be aware of this asset class, but it's a multi-billion-dollar business where you've got folks in their 80s and 90s who own life insurance policies that they no longer want or no longer need or can no longer afford. And in the life insurance industry, 90 to 95% of insurance policies expire without a death claim, which means that folks reach a certain age and they're saying, well, I'm not dead yet. I don't need my money from this policy. I'm just going to let this expire. Well, there's a market that exists where folks can actually sell those life insurance policies for cash. So when we talk about a deal, we're trying to create a win-win-win for everyone involved in that process. But we're looking at the different components of, if we're going in and we're purchasing a policy, we want it to be a good deal for the investors that we're working with. We want it to be a good deal for the individual that we're purchasing that policy from, and we want it to be a good deal for us as the managers of that policy. So as these things come together, there creates different scenarios and opportunities where we can go in and purchase a $200,000 or $300,000 policy with $1 million death benefit. And then when those policies pay out, we collect on that $700,000 or $800,000 difference between what we paid for the policy and what we got for the policy. But it's really gratifying because it's a combination of really the past 20 or 25 years of working in insurance, of working in investments, and seeing these things come together at the right place and right time. As the adage says, there is no, well, sometimes there's luck in things, but there's certain types of people that seem to be more lucky than others, and that's usually a function of their level of preparation that they've got taking into the deal that they're trying to close.
Yeah, is it the old saying is when preparation is when, or luck is when preparation and meets opportunity or something like that. Yeah, I think it was Goldman from MGM that said, "The harder I work, the luckier I get." So let's talk just a little bit more about the deal process. Now, any deals come to mind as kind of like the deal that got away that in your own history of doing business, and do you look back on it and go, boy, I wish I'd have done that one, or I'm glad I passed, or whatever?
Yeah. Well, on one end, hindsight is 20/20. so we've got a plethora of deal and options, and right now is a real good example on just what's happened with the coronavirus stimulus payments. In my position as managing monies, I remember getting on the phone with certain clients in mid-March when the markets were down 35-40% and saying, hey, right now and where we're at certain levels in the market where we should be looking at an opportunity to put money to work here. I mean, you want to buy into weakness and then sell into strength. And the conversation with some of these clients was, Dave, the markets are down 40% right now.
The world's coming to an end, right?
I'm scared, right? Yeah. I don't necessarily want to go in and do that. So now these clients are calling back to say, okay, we're ready to put some money in the market when the markets are now back at all-time highs. So when you look at deal things that got away, that's kind of an easy dynamic, and it's difficult sometimes to portray that to clients, to say now is the time to act when it might be a little bit uncomfortable to go in and do that. But yeah, there's a plethora of options of saying, we had the opportunity of buying this stock or this particular investment, and now look, it's up 3 to 4 to 5 times fold on what it was. But if I found that if we can position with clients, again, the reasoning on why we're doing something and show them other ancillary benefits from a tax standpoint or from a fee standpoint, or even a worst case scenario, if we do A and A falls apart, we've still got safety mechanisms and things in place where you're going to be okay, and that can help clients pull the trigger a little bit more as well, showing them the overall impact of what that decision is having on their plan.
What is your deal evaluation process or your due diligence process? How, obviously you're a fiduciary, right? So you're responsible, you're on the mountain sort of looking for the next opportunity, but also looking for the problems that might be out there. Right. What is your process for making sure that you've checked things out in a deal that it's going to be good for your clients?
Yeah, we do a lot of private placement offerings with clients, and this is just kind of taking advantage of this this anomaly that exists in the marketplace, where you've got the Wilshire 5000 index, which doesn't even have 5,000 stocks in it anymore. I mean, there's only 3,500 stocks in the Wilshire 5000. So it bodes to this idea that there's a lot of money in the private marketplace that's looking to go to work. You just got to make sure that you can sift through the good, the bad, and the ugly to present those deals to clients. Because you're right, as a fiduciary, I mean, nothing irks me more than getting burned by a deal and putting a client into a bad deal. So my process of how we kind of analyze what good offerings are or what aren't good offerings are usually starts at the very top on interviewing management and finding out what their systems are in place that they have. Because if someone has good systems, they have good personnel, they can generally weather a lot of the surprises that come their way. And I'm also a big believer in just doing as many personal visits and meetings with folks as you can, because it usually gives you a good idea on what they believe and what they stand for. But I mean, good, smart people that have good, strong businesses in place and good processes in place can generally handle a lot of the problems and pitfalls and curveballs that are inevitably to come their way. And that's what you want to find out to make sure that you're working with a systems organized type entity. And that's what I like.
You mentioned in-person meetings. Obviously, COVID has affected that aspect of it. Even today in the studio, we have George DeVolder, who's our regional director from our New York office. And we've talked many times about that. Even like New York City is a ghost town. Manhattan is a ghost town right now. People are, have left the city kind of thing, especially the workday. So, number one question, I guess, around that is you mentioned meeting in person. Is how important is it for you to look somebody in the eye and press the flesh before finalizing a deal? And next, how are you adapting to that during this time? Because I mean, obviously this show will come out sometime in Q4 of 2020. Maybe this is lifted, but I sincerely doubt that this is completely lifted. People are still having to deal with this, as well as I think people now are looking at through a whole new lens, a whole new paradigm of doing business. I think many people are going to be willing to do what we're doing here today, a video conference call, when they would have done it in person. So how important is that to you, and then how are you having to adapt?
Yeah, well, in my business, when I'm sitting down with a client and they've got $3 or $4 million, I mean, this is their life's work. And so for some of them, it had, or the understanding was, you need to meet face to face. You've got to meet eye to eye and knee to knee to kind of get this deal done. When COVID hit, shifted online, and we'd already had a strong online presence, primarily with our radio show and some of our YouTube channels. So what happened in the minds of consumers and potential clients was it shifted to this online format where then they're watching the YouTube channels, they're listening to more rebroadcasts of the radio show, they're getting familiar with what we do, and they were okay on doing a lot of these Zoom meetings and these video conferencing meetings. So I see that, and as it turns out, a lot of them, once they get the familiarity, they would prefer that instead of driving through traffic and coming to the office and so on and so forth. So we'll see to what degree this changes moving forward, but I love the aspect of having these digital meetings and these digital formats, and for the most part, clients have liked that as well. But if it is an important issue for the client and it's a deal breaker that we need to meet, then obviously we'll find a way to meet and make it happen.
Wonderful, wonderful. Can you tell us about non-traditional investments and what kind of appetite do your clients have for that? And maybe more specifically, what kind of non-traditional investments do you offer those people?
Yeah, this is a great question. And also, I think it's one of the great growth areas in 2020 moving forward. I touched on that a little bit before about the creation of the Jobs Act that Trump put into play, and part of his tax plan was the deregulation of a lot of the restrictions that had come with private placement offerings or smaller type companies to be able to go out and raise capital. I mean, before the burden to go through and put these investments in place was just astronomical. But now you can set up some of these entities and some of these fundraising ideas, whether it's crowdfunding or other types of options, that can be very dynamic. They are non-traditional. When we say traditional, we're saying outside of stocks, bonds, and mutual funds, and maybe real estate in that component. But there was an influx, and now there's trillions of dollars of cash, of capital in the capital markets that are looking to be allocated, and folks are hungry sometimes for some outside the box ideas. So we have 3 different private placement offerings that have worked well for us and our clients, and we're trying to find solutions where we can get multiple kind of birds with one stone, if you will, solutions that we can offer that give the clients a good rate of return, that give them a tax benefit, and that give them a great cash flow on their money as well. So if we can combine that and show them how some of these alternative investments, these private placement offerings, can improve their situation versus what they're doing right now, again, it's kind of a win-win for everyone. I made the analogy on my radio show that you've got different types of tools that are available in a toolbox, and if you're working with a carpenter, and the only tool that they have is a hammer, well, pretty soon everything looks like a nail, and they're just going to whack away at it, right? If you're working with someone who's truly independent, they have a broad arsenal of tools and instruments that they can use. This is key moving forward. With my kids, I make them mow our backyard. And there's a difference between them going out and trying to cut the grass with a pair of scissors versus using a lawnmower versus using a riding lawnmower. There's just different tools and different techniques and different instruments. And I find that the alternative asset space, especially some of these private placement offerings, when properly implemented, can be game changers for clients moving forward. But a lot of it is just education. They're not familiar, or they're not aware of what these tools can do. But with my kids, once they saw what they could do with a riding lawnmower versus a push lawnmower, it was
I was going to say, don't get them used to the riding lawnmower.
To follow up on that, with my kids, I would make them mow the grass first with the push lawnmower initially, so they would appreciate the benefit that they came from the riding lawnmower. Because if you just jump right to the riding lawnmower, you've got a warped sense of work. You think that's the way that it is.
Never get them to push it. That's for sure. Yeah, good dad.
You obviously lean in. I spoke about this earlier in the interview. You lean in toward content-based or education-based marketing, right? At the end of the day, you wouldn't be doing it if it didn't bring a benefit to your business ultimately. But as a professional in the finance space, especially as a registered investment firm, because we get this question from other RIAs, broker-dealers, etc., how can one like yourself, who makes up a lot of our audience, go out and use education-based marketing without violating any of the constraints of compliance? How can you do that in a compliant and ethical way, but still get your message across? You're obviously serving people when you're educating, but I know a lot of guys that are absolutely afraid to show up on that camera or on a radio show.
Yeah, this is a great point. I remember when I started working at Merrill Lynch, and nothing against Merrill Lynch, but when I sat down and I was meeting with a client and we were talking about a long-term care solution, we presented a solution from a company that Merrill Lynch didn't represent. I said, hey, I shot the market, and this looks like a good option for you. And my manager came back to me and he said, Dave, what are you doing talking about this other company? We can't sell that company. You can't make any money doing that. I said, well, I know, but I'm a certified financial planner. I'm supposed to be a fiduciary. I'm working for the best interest of the client. This was the best choice for them. He said, Dave, you can't work in that environment. So on one end, it depends on how you're structured. And if our audience is mainly registered investment advisors, they'll appreciate this takeaway as far as being an employee versus being the business owner. And in the securities world, you've got FINRA regulations in the broker-dealer space, and you've got the SEC regulations. Part of the reasons that I started my own firm and became independent was that so I would have the autonomy to move and to act on some of these investment ideas and options that were truly for the benefit of my client. Because I remember coming up with a good idea and wanting to move forward with it, and then having that get squashed or having that get handcuffed by our regulator at the firm, who said, you can't do this for this, and this reason. And mainly it was because there had been another advisor who had gone rogue and had done things inappropriately that really burned all the bridges and messed it up for everyone else. So again, being independent and having that flexibility to act and having the ability to go through that, truly being able to use the tools that are out there, I think only comes from that fiduciary space of being an independent advisor. And that's when you're acting in the best interest of the client. And with my regulatory practices, I always go by the prudent man rule, right? If you were in court and someone was trying to prosecute you, could you, show the key elements and the key points on why whatever you were doing put that client in a better situation than where they were before? How is this beneficial for the client? And if you can answer that question, yes, and do it convincingly, that works well, and why we're going to move forward and adopt a particular strategy. But again, in the regulatory space, if you're not capable, of making your own decisions and what's truly beneficial for the client, then you're not independent. You're generally working for that brokerage firm. And a lot of times when I do speaking engagements in other capacities, whether I'm teaching advisor or whether I'm in a room full of clients, I'll ask the clients to ask their advisor that question, right? Where is the money coming from? And if the money is coming from the broker dealer, that's who's paying the advisor. Although they may say that they're working for you, they're not. They're being paid by Edward Jones or Charles Schwab or Merrill Lynch or whoever that firm is. We get paid by the client. Follow the money. We work for the client, and doing so gives us that independence to use some of these outside the box private placement offerings or alternative investments that otherwise folks wouldn't do. And I think a lot of that too, JP, is because of unfamiliarity that quote unquote expert might have with a specific tool. And we found that if someone isn't familiar with something, they'll generally default to don't do it, it's bad, it's wrong. Well, just because you might not know how a specific tool works doesn't mean it's not valid when using the tools of the right professional.
Excellent.
Dave, can you share with us something that the business community doesn't know about you?
We could go on the professional side, or we can go kind of on the independent side, on the personal side. Going back to JP's previous comment about different videos on the YouTube channel, we have a fun little series called Dave Day. When I was in college, I had 3 college roommates that were all named Dave, and we all married roommates at about the same time. We lived in a house called the Dave House, and we all got married about this. Coincidentally, we all had 4 girls as far as kid-wise. I mean, I have 6 kids now, but our wives let us out of the house once a year for this process in this series called Dave Day, where we'll get together and have a fun time. But now when all the Daves get together, geez, there's a lot of estrogen in that room. That's kind of a fun component. And if you're named Dave, you can come to the next Dave Day party.
Yeah, there you go. Yeah.
Before we finish up, is there, our audience loves to give back. We love to give back. Is there anyone that Paul, myself, Daniel, anyone here at the team at Harbor City or the Deal Flow Show team, or our audience, anyone that any types of people that you would like to meet, to do business with, to have reach out to you? Strategic partners, strategic alliances, products, issuers, anything. And then at the same time, if you want, you're welcome to give out your contact information at this point.
Well, from an advisory standpoint, I mean, we're obviously looking for that key avatar client that fits that $3 to $5 million kind of net worth is where our main component is, and someone who values and appreciates comprehensive integrated planning. We think these are some of the solutions that we provide. And it's not just a one-time meeting. We're looking at a process, a comprehensive integrated plan that really puts them in a better position than they were before. So it's not just stocks and bonds. When we go through a truly comprehensive process, yes, we're talking about your investments, but we're talking about your taxes and your health care and your Social Security benefits and your home equity and annuity and insurance and health care, and how all these things come together in a truly comprehensive integrated plan. So if that's attractive to some of your listeners, or they have, they have connections in that space, would be happy to entertain that. You can find us online at theretirementincomeShow.com. You can just Google Anthony Capital LLC, and our information will pull up there as well. But we welcome that. Again, if your listeners find that there's value in a truly holistic, comprehensive, integrated approach, and where that comes into play. But someone that I love to meet was probably my boyhood hero growing up. I played quarterback on the football team, and I'd love to meet Joe Montana, someday, and just kind of kick it with him and learn more about his life and his processes and what he's done.
Excellent. Well, on behalf of the team here at the Deal Flow Show, I'm JP Maroney, Paul Nicolini, my co-host for this episode. Dave Anthony from Anthony Capital, good to have you on. If you're listening or watching this episode, you can find more episodes, more information, subscribe, follow up, contact us at thedealflowshow.com. That's thedealflowshow.com. We look forward to seeing you on another episode very soon. And hey, if you've got a story to tell, if you're a capital raiser, if you're somewhere in that spectrum of the capital markets, a service provider, someone who does business that's putting deals together, a deal maker in the deal making process, we want to hear from you and consider having you on a future episode of the Deal Flow Show. Once again, I'm JP Maroney, Paul Nicolini, and we'll see you next time.